Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 29th of March here in 2022. We have another market that closed at the highs, all-time highs, not new all-time highs, but nonetheless, a stellar recovery and a strong bounce off of this, really, the 4150, 4200 level in the S&P. And we'll talk about those and some of the key stocks that are beating the market, meaning making new highs, in some cases new 52-week highs, in just a little bit in the video. But let's talk about the bounce. And that bounce is playing off this 13,000 level in the Nasdaq. We're about the halfway back, which is 15,000, just shy of the prior high. The Nasdaq has taken a bigger downside move, and that's in large part because of the interest rates. We can look at those, just looking at our normal functions or markets or things that we look at in the evening videos and discussing the interest rate. So that pulled back today. Today was filled with risk on. What is risk on? Risk on is where the stock market tends to go up, and in some cases gold is going to go down, which is a risk off. Crude, we see it more as risk on, but nonetheless, and the bond market. So all of our sectors were bullish today except for the energy sector. And in part, that is because of crude oil. And crude oil, this is symbol CL for the futures, has had a big inflationary bounce and just as quick a clawback to the downside. So that's from the 130 per barrel down to closed right at, just above actually, the 105 level. That's where the market opened in crude oil. But something that's behaving similarly is gold. So gold had that similar strong uptrend going into the beginning of 2022, the breakout above 1850, the peak into 2050, that's per ounce, and then down. So compare contrast crude, which had its strong up, pull back down. And by the way, this is the daily chart on the left and the hourly chart on the right. We see the same play, strong to the upside and then strong back. But the bond market is the other way. The bond market, I like to trade and show TLT, which continues to be in a downtrend. Lower lows, lower highs, and that is under, at least was recently, the 130 per share level. Similarly in ZN, remember these prices are opposite of yields. So as yields go up, the Federal Reserve raising rates, and of course they control the Fed funds rate. They don't control the long end of the curve, but nonetheless, it does play through the bond ladder. Nonetheless, the 10-year note has made new lows, and as has the 30-year bond. And these are 52-week lows in the bond market. Continuing off with the equity market, the Dow Jones, Dow Mini Futures, pushed above that 35,000 level, and the Russell was the leader in today's session. That was up a surprising 2.5%. And the Russell has cleared above its sideways trading range. And that range was 2,100, 2,000, and then about 1,900. We see the market closing above it in today's session. So that's what we'll focus on. Just quickly looking at how the main stocks are in play. Which stocks led the market in today's session. And all I'm doing is looking at the stocks in the S&P 100 that were bullish or at least on the strongest gain in today's session. It wasn't Tesla. Tesla has been one of those leadership stocks recently, but it was not the number one stock today. That took the space of the other, or an other, car company, Ford Motor Company, and that's pushing off the 16 per share level. Under that was Mastercard, and that is actually in a sideways trading range. That shows up on my list and my scans as a sideways stock with a boundary, Mastercard, about 400, a little bit under 400. And lower support bounces. Most recent trade was a bounce off of 310 and 330 to play back to where we are now, which is the midpoint of the trading range. And I'll pull the perspective back a little bit further to show how that trading range has established in Mastercard. Not all stocks are making highs, not all stocks are making lows. Some stocks are trading within consolidated ranges. And that's a safer play for many traders. That takes you out of the mindset of why is the market going straight up, and helps you into the concept about mean reversion. Some stocks are mean reverting. They aren't all breaking to new highs, although we'll show some of them in today's session. There's the other car manufacturer, and that is GM, General Motors, in the S&P. I promised I'd look at Tesla, and Tesla right here is, again, recapturing these levels. So key focal point, key price point is a simple round number. It's 1,100 per share. And that will be a key focal point as we go through the shares, or at least the prices, what plays into our implied volatility, again, about 60%, and a $50 expected move in a very volatile stock. That key point is still the 1,100 per share level. That's Tesla. What about the downside? Which stocks in today's session were underperformers? When the stock market was bullish, which ones led the way to the downside? CVS. That is a weak stock that got weaker. ConocoPhillips, that's going to play right into the crude oil play. Lockheed Martin, some of the key bounce, or at least the key reason that Lockheed Martin or defense stocks went up, is the same reason, or one of the same reasons, that crude went up. And that is the Russia and Ukraine conflict. Crude went up and then recently pulled back, but then so did the defense contractor Lockheed Martin. Just to name one stock, there are other stocks that played similarly with a strong continuation upside play on the initial reports, initial moves in Ukraine and Russia, the conflict. And then once that has smoothed, or at least temporarily, those have pulled back. But also Chevron Texaco, similarly with an oil play. So these are catalyst stocks. Catalyst stocks are being unwound, at least at the moment. Otherwise, Eli Lilly. What are these stocks outperforming the S&P? In our quick scan at the end of the session, these are the stocks in the S&P 100, or 500 actually, that are outperforming the market and specifically making 52-week highs. So these are stocks that are familiar to us, and what I'll do, I sort them by market cap, and from that, the concept is those stocks that are strong do tend to get stronger. And we just simply look at our weekly chart on the right and the daily chart on the left. We'll start with Berkshire Hathaway. Is there a trade set up here? No. That would be a wait for a pullback, wait for a movement back down to that 20-day moving average, similar to the prior overbought examples when the market did creep higher and then pull back, went higher and then pulled back, went higher, did not get the pullback here, did not get the pullback here, and that's the thought process. So it is a little stronger strategy, or at least a better risk control strategy, even to be bullish, to do so on pullbacks. A pullback is, if it's an uptrend, the pullback is going to be the phase when the price goes down. And the idea is to establish spreads or bullish positions into these trending stocks. United Healthcare, similarly, what we're showing is the weekly perspective here and the daily perspective here. Just noting some of these key outperforming stocks. There is a strong one. AbbVie Labs has traded from the COVID low, or at least in the 2021-2020 period. That was under the 110 per share, and it now trades upwards of 160. And those pullback trades or strong stock getting stronger buys do play into that breakout stock. Beneath that is Union Pacific. Little trades and little setups in the range, but still, this is a strong stock getting stronger. And then a few others that will still be on the top range of market cap. So Anthem, Chubb, Duke Energy, Southern, and others. But the ones that are lower market cap tend to have not as good liquidity and maybe not as good bid-offer spreads in the option market. But they're still strong stocks getting stronger. And to note the numbers of those, that would be 49. That's about 10% of the S&P 500 stocks are making new 52-week highs. And in some cases, like Anthem, would be a new all-time high. And we'll put the daily chart back over here, the weekly chart here. And that's the play, at least from the concept of what is strong tends to get stronger. And we'll finish up with Duke Energy, which is a utility company, so we don't expect that much upside movement. Certainly not as we would see in the strength of Apple or Microsoft or some of the key stocks like that. But nonetheless, it's slow, steady, and consistent. That's the utility sector in general. Slow, steady, and consistent. Those are plays if you want to be a little safer with the market, still playing uptrend, still playing bullish opportunities, but without the volatility of the technology sector, the retail sector, and of course, we'll end with the energy sector, which made its high, but like crude oil, is getting a pullback. Probably an overdue pullback, but pullback nonetheless. As always, be careful and safe. This is Corey Rosen with tonight's Theo video update for March 29th, 2022.